How do insurance companies safeguard against fraudulent claims? There are red flags which trigger more extensive investigations. Experienced claims adjusters are superlative bullshit detectors. I never disregarded an adjuster's intuition regarding fraud. The problem is proving it. Statements are taken from the involved parties and witnesses. Appraisals are done on damaged property in order to obtain photos, weed out unrelated damage, overpricing, and to obtain agreed prices of repairs. Official police or fire reports and photos can be obtained. One can also visualize accident scenes using Google Earth. Or one can send a photographer to the site. Medical records and billings are obtained and scrutinized page by page, item by item. Medical records can be reviewed by specialists. Independent medical examinations can be required. Experts can be retained for cause and origin studies, arson investigation, engineering evaluation. There are databases one can check to see if claimants have had prior accident and injury claims, criminal history, past addresses, prior names, family members, known associates, etc. Anti-fraud technology and predictive modeling can be used. Sometimes tipsters notify the insurance company. If there is sufficient evidence of fraud, a claim might be denied or compromised. Unfortunately, no matter how strongly the adjuster believes that there is fraud, it cannot always be proven. Insurance fraud in the U.S. is estimated at $40–80 billion per year. Fraud costs the average U.S. family between $400 and $700 per year in the form of increased premiums, according to the FBI. Usually, some combination of data analysis on insurance claims and auditors who go out into the field. The analysts usually identify leads for potential fraud by looking at past confirmed cases of fraud. Usually some combination of predictors gets you red flagged for fraud, and if the dollar value is big enough, an auditor will take a closer look to confirm if it actually is fraud. Chances are, if you're doing something very typical of people who commit fraud, you'll get red flagged for being statistically similar. Then humans get involved, and the real investigation starts. In healthcare, typical predictors are types of service and situations, back pain, certain procedures that tend to get upcoded to a more severe diagnosis, certain drugs, and provider profiles. Provider profiles are useful because the willingness to commit fraud is a reasonably stable personal characteristic, much like criminality. If you get caught committing fraud, you can bet you're on a permanent list of people never to trust. The same goes for organizations, like nursing homes and outpatient facilities. Some of them are just head-to-toe crooked. The list even extends to associates with no record. Just being associated with a crooked provider makes the insurer more likely to be suspicious of other things the party does. Credit card companies also use similar methods to detect ID theft. A suspicious flurry of activity that looks statistically similar to confirmed cases of ID theft send up an automated red flag, and then further human investigation occurs. Fraud claims continue to be the biggest challenge for the insurance industry. Fraudulent claims not only results into more payouts and insurance premiums, but also damage the company's reputation. Manual detection of any fraud is almost impossible as it is expensive and handling sheer volume of claims can be tough for any insurance company. An effective claims management system is the best practice to reduce fraudulent claims. For effective claims management, insurance companies need to invest in highly skilled staff, training and technology, that can be costly for them. In that case, contracting work to third-party companies can be a cost-effective solution. In recent years, it has been observed that outsourcing is becoming popular among many businesses. Several leading insurance companies in the United States are outsourcing claims processing tasks, and that helped them in reducing fraudulent claims to some extent. Outsourcing is a cost-effective solution to the insurance industry, and the work is completed with the help of experts in an efficient manner. I may have answered this question previously. We had an industrial accident claim from a 37-year-old man. I forget the mechanics of his accident, but it involved his back and it was reported to his supervisor immediately. We paid his bills and comp for quite a while, but he did not seem to recover. His attorney claimed he was totally disabled. My adjuster on his case was suspicious. I hired a private detective to follow him. It turned out that he was working in an auto shop nearby. The private eye had a van with one-way glass. He set a camera inside the van window, drove to the gas station with a flat tire. They left the air out a short distance away. His helper remained in the van and ran the camera. As expected, our claimant rolled his jack out, raised the van, removed the tire and rolled it to his shop across the street for repair. His back did not appear to be a problem while performing these maneuvers, and we had it on film. We told his attorney what we had and the case settled quickly. This scenario is often repeated in WC cases. The facts may differ, but the claimant's fraud runs a common thread.